In this video, we're going to look at using Power BI to preview your month-end journals before you apply them to your accounts. The idea is to help speed up your month-end process and also relieve the frustration of applying journals, then looking at them and then realizing you have to do reversals. Here is a simple Power BI report, and our intention is to use it to visualize our proposed adjustments for November 2025. The report contains two charts, one showing the income statement and the other showing the balance sheet as of the end of November 2025 before I apply any of my proposed adjustments. We're looking here at a spreadsheet of journals that I would like to apply and visualize in my Power BI report. This spreadsheet is a template from my accounting software, so that if I'm happy with these journals, I can simply upload this to my accounting software and they'll be applied. I've got three journals. Firstly, I've got a journal from director's salaries to gross wages of £20,000. That should affect just the income statement. Secondly, I've got a provision for bad debt of £50,000, affecting both the balance sheet and the income statement. And thirdly, I've got a transfer from travel expenses to mileage expenses also on the income statement. Now back to my Power BI report. This report is set up to read that spreadsheet we've just prepared. And all I need to do is click refresh. And here we have it. We can see all the proposed adjustments presented, where I can see the current position, the adjustment, and then the final result. On the left-hand side, we've got a table of the proposed journal adjustments. It's a summary basically of what we had in the spreadsheet. And we can toggle between the different adjustments here. So if I just want to see the transfer from director salaries to gross wages, I can click here and I can see the impact of that. And we see zero impact on the income statement, zero impact on the balance sheet. But this zero here indicates that within gross wages I've got something going on, but the net effect is zero, and it's just transferring money between these two accounts here. Likewise, if we look at the transfer from travel to mileage, it's slightly different because actually these two account codes are in different categories on the income statement, and we can see the transfer here from travelling and entertainment of 28,500 to motor expenses of 28,500, but still the net effect on overall on the income statement is zero. And then finally we can isolate the provision for bad debt. Then that appears here and we can see the adjustment, and we can see also the adjustment on the balance sheet. Now let's take a quick look at how this works. It's actually quite straightforward. In the background, I already have a Power BI report for my financials covering the income statement, balance sheet, cash flow, and so on. So we're looking at the month of November and we're looking at the actuals, and we can see, for example, that we have no bad debts in here. So this represents what we were looking at as the current position before we apply any journals. And we also have the balance sheet. These closing numbers are the same as we were looking at in our previous report. What's happening in the background is that our report that we're using to present our adjustments is using the semantic model here of this refreshed financials report to present the numbers as they are at the moment. Then the spreadsheet is bringing in just a few lines which represents the journals that we want to apply, and the report is then overlaying these on the current figures that are coming from the semantic model to give us our projected impact on both the income statement and the balance sheet.